This is the first Miami market update. Every month, one reel. The numbers that actually moved in plain language for Miami and Miami Beach specifically. Let's start with the headline. Miami-Dade just posted its best June in 3 years. Total home sales are up 14.3%, the 10th consecutive month of year over year growth. Single family up 16.8%, condos up 11.9%. This means Miami's recovery isn't a 1 month blip. It's been building for nearly a year straight. Statewide, Florida also grew. Single family sales are up 9.3%. But here's the honest context. Last June was unusually weak, so some of the percentage reflects a low starting point, not just fresh demand. This means don't just read the percentage. A big bump can mean real growth, or it can mean last year was just a bad month. Here it's a bit of both. The stronger segment in Miami-Dade are homes over $1 million. Sales there climbed 29.1% from a year ago. This means that the highest price tier is growing roughly twice as fast as the overall market. And this isn't just a Miami story. Nationally, NAR's chief economist Lawrence Yun reports homes under 100,000 fell year over year in June, while homes over $1 million rose 18%. This means the same luxury outperforms everything pattern is happening across the entire country, not just here. Home prices, Miami-Dade's single-family median is now 695,000. The condo median is 431,000, down slightly about 3% from a year ago. This means houses are still getting more expensive, but the typical condo actually got a little more affordable. Now, Miami Beach specifically. Single family closings rose 37% year over year, the strongest second quarter in 4 years. Inventory fell to its lowest second quarter level in 3 years. This means if you want a single family home in Miami Beach, you're competing for fewer of them than you have in years. Condos on the beach tell a more complicated story. Sales rose 15%, but the median price actually fell 4%, while the average price rose 6%. This means one number went down and another went up, because of a handful of very expensive sales pulled the average higher, while typical condos actually got a little bit more affordable. That gap matters. It means entry level condos are seeing real value, while $5 million plus sales are pulling the average up. Two different markets, one number. This means don't trust a single average price headline. Ask which condo market you're actually shopping in. Now, financing. The 30-year fixed mortgage rate is averaging 6.55% this week, holding in a narrow range and still meaningfully below the 6.75% it was a year ago. This means borrowing money to buy a home costs a little less than it did last year, and it's not swinging widely week to week. Insurance, the story most people are still afraid to ask about. Citizens cut rates by an average 8.8% this month, with larger cuts across South Florida specifically. This means the insurance bills that scared everyone off for years are finally starting to come down, not up. And for condo associations, the carrier that insures more Florida buildings than anyone else reported commercial premiums down nearly 17% year over year. This means your condo association master insurance policy, the one baked into your monthly dues, may finally cost less at renewal. Now, international buyers. Across South Florida, Colombia is the top source at 15%, followed by Argentina at 12%. But within Miami-Dade County specifically, Argentina actually leads Colombia by transaction volume. This means that when we talk about international demand here, we're mostly talking about two countries, And locally, Argentina may actually be buying more than Colombia, even though Colombia gets more headlines. The math for these buyers is still simple. Mortgage rates in their home countries remain well above 10%. A cash purchase here still outperforms borrowing at home. This means US real estate is still often cheaper to finance in cash than borrowing in Colombia, Argentina, Brazil, and Mexico. For European buyers, the dollar is modestly stronger than it was a year ago. A small headwind, not a large one. This means your euro buys slightly less US real estate than it did last year, but only slightly. So, what does this mean if you're buying? Where inventory is loosening in mid market condos, you have real room to negotiate. Where it's tight in luxury and single family, you don't. This means know which segment you're shopping in before you decide how hard to negotiate. And if you're selling, price the middle of the market realistically. If you're above 5 million, the data says you still have leverage. This means overpricing a mid market condo will sit. Overpricing a luxury single family home right now might still work. That's the picture. One market growing broadly, but moving at two speeds within it. And the honest numbers matter more than the headline. This means read past the percentage. Ask what's actually driving it before you act on it.